Hey everybody, welcome back to Dollar Cost Austin. I'm Steven. This is Colin. And we are here for our week. I think we didn't do one last week, so I think this is week 20 and 21 of our weekly buys here. And yeah, things are still pretty bad. So not much different from our last episode here, but yeah, things are inflation still wreaking havoc on the market. The Fed, I think since our last one, the Fed in the States raised their interest rate 0.75%, which is like the largest in decades. Yeah, investors are a little rattled, companies are a little rattled, market's pretty down overall. And then yeah, we're still in crypto winter for the foreseeable future probably. So that has also taken a big hit here, although it rebounded a little bit in the last couple days here.
That's pretty scary. But the scarier thing for investors that it looks like they're gonna keep these 0.75 or these 75 basis point raises. Before they were maybe thinking of 0.5% increment, like, and then try to do that, but no, they're gonna be like, yeah, it's we're way behind. We're gonna pump these rookie numbers up.
Yeah, a lot of the big bankers, like private bankers in Canada, are also thinking that Canada's probably going to follow suit with the 0.75% raises here. So if you're looking to get a mortgage, get one fast because it's going to keep going up. The other thing now is the other thing I've been hearing a lot in the last few weeks here now is recession is being thrown around a lot more, which also like just people saying recession is gonna cause some market skittishness. So yeah, maybe not. From what I was reading, people think Canada might be safer than the US, but like we'll still see decreased rate of growth. So not as much GDP growth as we've had in the past few quarters, but not negative growth, which would be yeah, recession is 2 consecutive quarters of negative growth, which people think we won't quite hit in Canada for now, at least.
So if you think the U.S. is gonna hit a recession, do you think it's only a matter of time for Canada, or do you think Canada's gonna stay above water?
Yeah, it's interesting. It's a lot of the things you see when you hit a recession are kind of not happening right now. Like the the employment rate in Canada unemployment rate in Canada is still at like an all-time low right now, despite the kind of shaky state of the economy, which is kind of an interesting dynamic. So it's hard to say. There's a lot of appetite still for growth. The government just wants to try and temper it a little bit because too much growth is happening too fast.
Crypto did something that a lot of people were hoping it wouldn't do, and that is everybody thought the floor would be the previous highs of the last cycle, but Bitcoin and Ethereum both fell below their highs from the last cycle. So a lot of people are now worried because it's price discovery the wrong way. They don't know how low it can go. Like you said, it's recovered a little bit in the past a little while, but I don't know. It might be just a dead cat pounce and fall a lot more. So we'll have to keep an eye out on that.
One other thing I want to mention about like the talk of recessions as well, like another kind of interesting thing is some amount of the inflation that we're seeing has been attributed to supply side issues because there's been transportation issues and shortages of things, which has driven prices up because there's fewer things that people want. So another kind of factor, particularly in anything that needs computer chips, as people ramp up capacity to build more semiconductors for microchips, that can also help ease some of the supply side issues causing more inflation as well. So that's kind of another interesting factor that like probably some meaningful amount of the inflation is due to supply side issues. And as COVID kind of, well, it's still fully around, but as the world learns to live with it a little more and there's fewer disruptions to supply side, that could also help the economy deal a bit better with the inflation as well.
I know, especially the automotive industry is still facing a lot of these supply chain issues. Like Toyota, if you want a RAV4, some places are booked out like years in advance, not even months.
Yeah.
Which is the crazy thing. I've read that part of it is because a lot of the factories have set up their system to build the state of art chips for your handheld devices or your laptops or whatever. And some of these cars use simpler chips, which ironically makes them more specialized. And that's part of the problem because I believe some of the consumer electronics, the supply chains are getting a little bit better, but we don't see that in the automotive side. So it's kind of interesting that that's one of the reasons why. But yeah, no, very good point. Okay, very cool. So week 21, so we should have 3K. That means I am down over $500, 518, 17 bucks. I have some in my RSP now. Okay, so I'll keep it short. So basically in RSP, you may want to consider putting your US stocks, especially ones that give dividend, in your RSP because the US recognizes an RSP as a registered account, and there's an agreement where part of the withholding tax that the US holds on your dividend that they give to Canadian residents. It's something like that. It's a little bit more tax efficient. That being said, over the long run, if you don't care or really don't know about any of that, doesn't matter. The biggest thing is just to max your RSP and TFSA. So that's the long and short of it. So for my 2 weeks, I bought two different things. I put a little bit in ETH, but I bought two different stocks. My first one is just an ETF, and XUQT. There were a few ETFs where if you don't care about anything, you don't want to rebalance your portfolio. You don't want to rebalance your portfolio, or you don't know what that is. Then you can buy XEQT. This is literally if you just put in money week after week after week into one ETF, you can put it into this. So what is XUQ? Oh my gosh, I don't know why it's so hard for me to say this. XEQT. I'm just calling this the ETF. It is very heavy in U.S. stocks, which I personally prefer, and I know a lot of people prefer. If you want more Canadian exposure, we've talked about some of the other Canadian ETFs in the past weeks, but I think this is a good weighting. Almost half of the ETF is in U.S. stocks, and then of course you have a mix with the TXX and S&P. So it is a very, very balanced ETF. That's all there is to it. Managed fee, that's not too bad. We talked about yeah, that's pretty low. We've talked about it enough. It's pretty good. The only reason why there isn't a lot of data is because a lot of these ETFs, they rename. So this ETF, there is some form of it that's been going on for years. And if you look at it, it's probably close to the return of the S&P 500. In my second week, I bought a Canadian darling. I'm not going to pronounce this. Steven will have a better time pronouncing this.
It's Alimentation Couche-Tard.
There you go. Perfect. Just like that. But more commonly, and Steven might have even talked about this before, they own Circle K. They own Max Convenience Store. And if you didn't know, they're Canadian based, but they're multinational. They're found in like China, Russia, like everywhere. They have like over 15,000 stores. They're actually huge. Their convenience stores aren't super exciting, but they have a solid history of return. And even in a recession, they do very well. I totally forgot about this. This is something that I should have in my portfolio, so I picked it up in week 2.
What's the 5 year look like?
Oh, good point. 5 year. Oh, this I don't like Yahoo Finance that much, but it's almost double.
Cool.
A little bit under 20%. Yeah, that's pretty good return. And and you get a little bit of dividend too. There you go. Little icing on the top.
Nice. Awesome. Yeah. So when we did the last one, my portfolio was down $253. Then for the next 2 weeks, it was down about $450, and that's even after adding $100. So yeah, not fantastic. I did my buy on Thursday though, and actually, and right now, so there's one more day of trading. And it actually rebounds. It bounced back about $70 for 3%. So Friday was a good day, I guess. But yeah, so my buys here. Week 1, I bought. So I think this is a new one for this. Yeah, it is. Okay, so yeah, the first one I bought, I actually added a new ETF. It's XFN, and this one is it's an ETF that holds the major Canadian banks, and the holdings are capped, so there's a maximum amount. Actually, sorry, I didn't buy just the bank one. XFN is Canadian financial company, so it's not just banks. It also has things like Brookfield Asset Management.
Awesome.
And some insurance companies like Manulife, Sun Life, Intact. But some more exposure to the financial sector, which I wanted more direct. I guess it's not direct exposure, but like I guess more focused exposure relative to the Canadian broad Canadian ETF, because with increasing interest rates, that's typically good for banks and companies that deal with investments. So. Yeah, so I wanted some more direct exposure to that. So I added that in, and I set my target weight for finance at 2.5%. And I took that off of crypto. So, lowered my crypto target and reallocated it to finance stocks. So I did that in week 1. Pretty low, relatively low management expense ratio, only 0.61. And then in week 2, my energy weighting was getting a bit lower. And ZEO, which is the oil and gas ETF that I have, was actually finally in kind of a good buy pattern. Yeah, so you can see it's really starting to bottom out here. It went down quite low outside of the Bollinger Bands. And yeah, it looks like it could even go a bit lower here. But yeah, so it finally looked like a good buy. And so I bought a share of that. It kind of put my weighting a little bit high for energy, so I won't buy anymore for a while probably. But I was really wanting to try my balancing between the clean energy one and the oil and gas one was too far towards the clean energy one. So yeah, I'm happy that I can try and bring that a little closer now with another share of the oil and gas one. Other than that, yeah, just bought a few crypto ones of the crypto ETF with kind of my leftovers that weren't enough to buy shares of anything else. But yeah, overall my weighting is pretty spot on, within 11 cents actually.
Nice.
Yeah, pretty good. 807% for the health one, and crypto is pretty close as well. The indices are a little bit out now, so I'll probably focus there next week. Now that I've kind of added the finance into the mix and was able to find a good time to buy the ZEO one. So yeah, that is my buy for the last 2 weeks here.
Perfect.
And yeah, so down almost 13%, but yeah, it rebounded a little bit from Thursday when I did my buy.
Nice. That you're beating the S&P 500 in the. So, excellent. Very, very good.
Cool. Yeah, so that is weeks 20 and 21. We'll see how the markets do this week. Hopefully, I guess, I don't know. We'll see what happens. It might not bounce back. Things are pretty kind of turbulent right now, but we'll see where she goes and we'll keep doing our weekly buys here.
Yeah. And unless you're retiring right around the corner there, this is a perfect time. It's a perfect sale. It might keep going down. Who knows? But it's definitely a lot cheaper than a couple months ago. So keep on buying, keep on DCing, and we'll see you guys next week or in 2 weeks, depending on when we do one of these again. But yes, see everybody.
Awesome. See you later.